Okay, so the recording was uh, sending to the wrong file. This section that I wanted to send to was actually sending like to my OneDrive or whatever. I don't want it to do that anymore. So really quick, this is going to be the recap for Monday, August the 17th, 2026. I'm going to go back over here very quickly, the dollar index, kind of what we wanted to see from the Discord where I dropped in the pre-market, and then a couple things that I talked about. That really stuck out to me for the NQ trades that we ended up taking today. I did experience a break even or so, and then like two scratches, and then a nice winner. Okay, so really managed the risk pretty well when it comes to the proper sizing that we wanted to use, and then we had a pretty good take profit that we were looking to deliver. Okay, and so we'll go back into this. This was what we were looking for when it comes to the futures. Okay, looking at everything so far this morning, I was able to catch shorts around the 30,300 area. So I did kind of play the pre-equities open. There was a nice formation that had formed around like 6:50 going into like 7 a.m. Right, so I'll kind of show what that looked like here on the 15 and the 5 as I'm talking about this at the same time. Okay, so on this 15 and on this 5K, this would have been here. I'll kind of point some of this stuff out as well. This would have been 7 this morning, okay? And so I was looking at the charts around then. We did have some news that was coming out around 7:30 that could um, inject some liquidity. I did have the overnight target as already a bias, right? Where I thought some potential stops would be resting, and then we had the new week opening gap that aligned with the market open. So wanted to see those get delivered down into the zone, and then possibly see the short covering to buy that position back up. Okay, so that's kind of where my mind was pre-equities open when we were looking at the pre-market. Some of the levels that I was looking for on the NQ to the downside, you can see here, right? First, I want to see how price reacts when we hit the 3160 gap, so just the new week opening gap, and then sell side if we did deliver those. I wanted to see 30,100 down to 30,050 down to 30,025. Okay, so what we did end up delivering today was, as you can see here, as we fell past the 250s and fell through that 160 level here around noon, we did end up delivering 30,100. And then I do think that we could possibly get down below 30,000, 050s, and possibly to my key level that I identified, 30,000. But it may not happen here until the overnight, which it has opened 10 minutes ago. Okay, so that's kind of what we were looking for when it comes to that. Okay, and so now I'll go over the trade that we actually took. So let me look at this just really quick and see where we put that. So the trade that we actually took today was the buy position around 947, and then there was also another position that I called out in the Discord around 930, as I thought was a pretty good buy position for individuals to be taking. So 930 was like the area that we started to identify it, right? And then 947 is where we ended up actually executing on the trade. Okay. And so let's go into it here really quick. Let's dive into the 15.5 in 1 minute. And so at the equities open, as you can see here, we did have quite a bit of manipulation. It was pretty choppy. There's something else actually I wanted to bring up here really quick. That's going to be, let me pull this down here, what I'm actually going over right now. Okay. So this is my pre-market analysis, what I need to improve on today, what I learned today, changes I need to make, market review. So it's just my daily review report card. Now, the one thing I was saying in the last video was that in the course, you'll have all these things put together into one, right? So the daily reviews, the weekly reviews, the monthly reviews, and then you'll also have like the templates and things to actually utilize and tools to start basically going through the 4-step ecosystem, right? So you're gonna be able to come through the academy, right? The boot camp, and then you're also gonna be able to come in and obviously trade live with me in the live trading floor, but then you're going to be able to use these documents and templates to grow with the group, right, in the Discord, by utilizing the same tools and methods and seeing the charts in a similar fashion. So these type of tools really help the most. This is what I call the grunt work, all right, is doing this section right here and really grading yourself and looking to grow. Okay, so like Step 4 is kind of what we're doing right now. Okay, so looking at the day type, I'd say the day type was pretty choppy, right? When you're looking at like equities open, right? So 8:30 a.m. it was pretty choppy on the price, right? Like we're looking at all this, like this was real, barcodey, and it's pretty choppy. There's definitely opportunities in there when there's draws on liquidity, but it was definitely pretty choppy. Now 9 a.m. cleared up more for me. Okay, and presented opportunities here around 8:47, which I'll go over which one we took. And then 9 a.m. was a lot more clear, like 9:30 going into 10 a.m. All right. So um, we'll dive right in. What we were wanting to see here really quickly, I'll talk about dollar index. Dollar index, I wanted to see a move down on this daily. We weren't really seeing too much signs of strength over 100. So if we want to see downside on dollar, most of the time we want to see upside going into anything XXX USD. So that's going to be like your NAS 100, your MNQs, your NQs, stuff that we trade, right? And so when we sold off right at the equities open and drew on these stops, right? So like when you're seeing this and we see the equities open, the first candle here, we just immediately run up really high to fill this like fair value gap in the 260s. Then the candle eventually closes bearish, and the next candle 35 to 40 draws on the stop. So what does this do? This is triggering sell stops. Okay, people's sell stops are sitting right here in this area, and what they're trying to do is they're trying to get into the market right in the same situation and follow that trend down and be pushing down with it. Okay, and so they trigger those sell stops. Now this is what I like to see right at equities open, is this candle be printed here, and then the next candle print with strength. Now immediately when I seen this, okay, because there's a couple things I like to look for in the equities open setup, and it's going to be first 15 minutes of the hour setups, or excuse me, first 15 minutes and last 15 minutes of the hour. Okay, so what I mean by that is like 8:45 going into 9, and then like 9 going into 9:15. The most magical time when it comes to futures, and especially like NQs, especially, is going to be 9:05 going into 9:10. So it's just an algorithmic time that price likes to move. Okay? And so for me, as soon as I seen this candle print here, this 5-minute candle, okay, it printed bullish, giving me signs of strength. Also, I know that 100 tick players, 1 minute players, right? They're getting stuck on here in the FOMO move. So I know right here, this is where I need to start evaluating a couple things. Where is my target going to be? Is that target 3 times my risk? And is the structure aligning for me to take this trade in timing? Okay. And so we got the sign of strength. Now, usually in the second candle after the signal candle, the sign of strength candle, right? That's usually where they dig on the 1 minute time frame. Okay, so we're looking to define a couple things. Here's our signal. Our target was going to be the buy stops that are sitting above the New York highs. Okay, we have our signal. Now we're waiting for price to move into our favor on the 1 minute. Now, when we're waiting for it, like I said, after the sign of strength, and the second candle usually presents like the dig and kind of like digs for people and then goes. You have to be patient, and you want that usually to be at the right time. So our first entry that we ended up taking today was at 8:47 a.m. and the price level was at 30,178. So this is just a couple of things when it comes to the entry strategy. Okay, I'm gonna move this line because you just have to know that that's what we're dividing right now to get to the target. But when you're looking at the entry strategy, there's something I'm very specific about when it comes to the entry part. Is we got in at 178 at 47. So right here at the bottom, you can see it's 847. And then we got in inside the 178 on the first trade, right? So 178 was here, right? Which was pretty good trade. Okay, so I was wanting to focus to make sure it's 178 is where I got there. So what I was trying to focus on in this situation, I wanted to show up on both here. So when I plot it on the 1 minute, I want you to look on the left side and just kind of see where it's at here on the 5, okay? So 178 is here, okay? Mark it in blue for buys. Okay, so 178. Now my goal when I'm taking this trade is I want it to be inside, okay, this 5-minute yellow box, and then on the 1 minute I want it to be inside this zone here. Okay, what these candles are, they're just demand candles, discount candles, right? Whatever you'd like to call them. But that's what we like to call them, right? Demand candles, discount candles, and they're reference candles that we can use to be able to define our edge for the turn. Okay. And so with them drawing, like I said, on the sell stops here, okay, and then them creating this market structure shift, these are the type of setups I like to see. Okay, like I usually like to see these that end up taking out the area. Now, this is how this one ended up playing out. Um, we got in at 847. Let me make sure I wrote that down right, sorry. We got in at 847 and we were out by 907. So how do we frame it up? Based on what I like to do, like I said, when you get the entry, you're making sure you have the right location. The timing was right, right? It was in the last 15 minutes of this hour going into 9 a.m. Price was here, and I was looking for a target that was at least 3 times my risk. Now, remember, my target on this trade was to be able to get, excuse me, to be able to get through the New York highs, okay, which would have been delivering a 1 to 5 R from this zone, okay. But 1 to 3 was where we were wanting to, on the first push like this, wanting to start, evaluating like if we're at least 2 times our risk. So I usually risk 20 points for 60 for the 1 to 3s. And then I like to risk 20 points for 40, or yeah, 20 points for 100 for my 1 to 5. So my 1 to 2s, I need to know where that's at. Okay. So I need to know when I'm at a 20 point risk from my order. Okay, and then 40 points in profit. So a lot of times when price moves back up to point of interest like it does here in this situation, I like to protect or pay myself at point of interest. So it's also a mantra. Okay. But what we were able to do here was we were able to take this trade to the 1 to 3 zone. We started to see that our liquidity target that we wanted to deliver wasn't being met. And then price started to roll over and create a lower high, right? So this was a lower high essentially here. Put this a little bigger, right? A lower high on the 1 minute time frame. When you look at like the actual structure of things, it couldn't break through the 250s, right? And then price rolled back over, okay? And so we were able to scale out of a nice little profit here, was able to protect the remainder, right? Because as price started to roll back over, we went and protected it. And then the trade ended up hitting us back out, break even, because I ended up moving my risk up just slightly after taking a small partial. And that ended up taking us out here around 907. Now, the next trade that we were able to take on stream, okay, was attacking where I just had the lower highs. You can see where that lower high zone is. I'm going to replace that with liquidity, right? Because what is that? That's where people just sold, okay, sold and they put their stop loss, okay. And so now when you look at the position that we took here, like I said, it ran up, wasn't able to break through those 250s, comes back down, stops out pretty much everyone that didn't do anything. And then people probably are thinking, oh, it's going to roll over and fall back over. Okay. So now where I want you to fix your eyes is going to be on the next draw on liquidity. Okay. And so where we were focused after this move was complete, we'd already partialed out, right? We were looking at a higher time frame. Okay. And so on the higher time frame, where we were at this point on a 1 hour, if you look here on the left just really quickly, was we were looking like this. Okay, so this was the 5 minute candle here, would have been 920 going into 925. Okay, so this candle right here is where I'm focused on, where they're drawing on that liquidity of 30,160, which I had given out in the pre-market, and it was basically the new week opening gap. Now, as we're testing into those areas, individuals who are short, especially from the overnight, 30,300s or more, right, they're most likely covering in these zones, anticipating that maybe price isn't going to go to 30,100 or break down to the 50s or key level. Okay. And so what we were able to do is we were able to look at this from a perspective of like where they're going to draw on that liquidity. And then it was around 925 going into 930. I seen this exact candle right here. Okay. Um, I'm such a noob with these. I seen this exact candle right here. Okay. The 1 minute here on the right. All right. I seen that 24 to 25 candle draw on that liquidity. Okay. And then I started to see price, right, start to print really nice in those 30,180s, okay? So where I ended up taking a trade, let me look at the price level that we took, 925, and exit was at 10 a.m. So now this one was, because we had already partialed out of that first one, this one was looking to get back into where people sold the low end of the range, obviously New York highs, okay? And then through up when you're looking left to the FEG. Okay. And so they had the FEG when you look at this area here. So I'm basically what I'm identifying as here. When you look left, Okay, so this is a fair value gap area. Okay. So we're looking for this area to deliver, which that's where all the liquidity was resting. And then right above that, if you can notice, there's like a slight little gap right here. Okay. So like right in between this area here, excuse me, there was a nice little gap sitting on the 1 hour. Okay. And that's 30,000 to like 85, 289. So it kind of looked more like this when you're looking at like a 1 hour. Okay, so you see the gap between right here, this low, 283s, and then you have the high on that was 266. There was a nice fair value gap area that was met. Okay, and so where we were able to get in on that, let me make sure and check the order here. Um, I played the 1 minute breakout inside the 30,000 180s. So it started to break out on this 5 minute. I was still utilizing the candle that took out the traders. Okay. I was looking to have a 20 handle risk. So it looked just something just like this. Okay. And then my goal on this was to take this through these highs and then through that New York high. Okay. And so, just to kind of show you guys what that looked like today when we took it. Okay, there was a few people that was able to take some earlier shorts, and then some people that were able to take these long positions. This is what the position ended up looking like. Okay, so as you can see here, it's 9:34 a.m. at the bottom, right, Central Time Zone. That candle that I had identified and showed you guys, right, that 925 candle, which is right there, it drew on that liquidity, and then we started to get that 1 minute breaker candle, right, 30,181s. Okay, and then I was wanting to play inside the 5 minute demand discount candle, just really wanting to attack back up to the 730 news price, 30,238, or possibly the New York highs, which were the 30,260s and higher. Now, it's set for up here, but the trade where I ended up getting out and being done with this trade with the runners was at the target zone, which I was giving out here, as you can see in the Discord at 10:03, 30,265, which did deliver. And then right after price delivered that area in those 280s, right? If you go back and look at the price in those 280s, here, okay, price came up inside those 30,280s, delivered the fair value gap that we were talking about, and price buyers liquidated and price rolled over, okay? And so that turned out to be a really, really nice position. We did get those to finally deliver. I didn't really expect it to go very much higher than that, okay? After that draw on liquidity. Like I just really wanted to see if they could deliver that 270 zone. Okay. So that's the position that we ended up taking today. Okay. The first one I showed and identified. Okay. I thought it was a really, pretty good position, right? When you're looking at what we look for, criteria, timing, draw on liquidity, structure shift after the draw. Um, met all the, it met all the criteria is timing, right? Last 15 minutes going into 9. And so really what I would say, like if you're, plugging into the premium Discord, is just understanding, guys, that we're in a base hit market. We're in a market where, sometimes we could deliver 5R, right? Like in a situation like this did deliver 5R and pushed a little bit farther than a typical 3R trade, which was, still really great delivery. And it ended up being like a little bit over like a 1 to 4. So that's perfect. Okay. That's a perfect type of situation if you're going to actually wait for a little bit more of liquidity to be drawn on in that situation, right? And all this, everything was aligning when it comes to buying below the market open and bullish conditions and just essentially all the stuff that I teach. Okay. And so tomorrow we will be on the lookout for a few things, which I will be talking about obviously pretty early in the morning. I will be erasing all this lipstick off of the charts going into the night and just be, you know, very clear. I want to keep it very clear and just identify the special levels and the certain prices that we're looking for in that day. So, um, these last 2 weeks of this month is really trying to put together some really, really solid base hits and really look for some solid criteria setups. So I will see you guys in the morning. For you guys that are definitely, like I said, in that premium Discord, I'll see you guys in the morning for the pre-market. And if you have any questions, you guys know where to DM me. It's RickeyTrades at all social media. Okay. So I'm trying to think if there was one other question that someone had asked me to answer really quick. So I wrote a couple things down here really fast. From the documents, a couple things that I need to work on that I had said from the original document that we were looking at. Okay. So things that I'm going to work on and changes from tomorrow is just less wasted ammo, right? So I would say what can really change that is going to be being very selective and only taking those trades in that first 15 and last, and just, punting, right? So just getting rid of anything inside, at 30 and stuff like that. Like sometimes there's really good ones. Like I said today, it'd be hard to say that. And then you're looking for the draw and liquidity is more important than anything in the context of everything, in 5 minute closures. But they still, when you actually go back and look at the first 15 and last 15 minutes of this setup here, right? So if you're looking at like a 5 and a 1 minute, and you're looking at the right time, which would be 9:40 going into 9:45. I actually like the market, the shift in delivery here, by the 5 minute candle, because it actually closes 40 to 45 with a sign of strength, and then that next candle opens, and there's definitely a play right in there to also attack those 30,250s or those 30,000 270s. Okay, and it looked really good when you look at like a 15. Okay, because at one point all you could see was this, and so you did get a 15-minute sign of strength here, which was 9:30 going into 45, so into that 15-minute kill zone. And then that next candle, the 5 minute actually hold the structure really well into the draw and liquidity. And that next 15-minute candle was the blast, right? So you only need that one candle shifted in the state of delivery, right? When you look at the actual structure, right, making it bullish. And that was a clear sign to me that there was a good chance of them delivering it, especially here, the 254s, but that New York high. Okay. And so, pretty good setup for today. We'll look at what we have for tomorrow. But like I said again, last thing I'll say is just be on the lookout here, guys, in this next month coming up for the course, right? The RSV blueprint, so that you can actually take, the entry strategy, the timing. And I'm going to do this for ES and NQ, right? So that you're able to also learn divergences and have comparative strength analysis in your setups. But the main focus is really just helping you guys get a simple bread and butter um, way to play the market, right? And it's something that is very repetitive and something that's very simple and that you can essentially size into over time, and kind of like lifting weights, progressively overload the position over time, right? So again, appreciate you guys, and I will see you on the next one.